All right, good morning. Let's go over today's trade plan. So in the overnight session, we've seen that ES was relatively balanced, just trading within a range. And at this point, short-term buyers look to be in control heading into the open, but overall, we're still in this two-sided market, and we need to continue to see the strength on the buy side in order to really have conviction. Because one thing this market has been lacking is directional conviction, right? It's big up one day and then, large gap lower, and just a very two-sided market balancing within a range. So, it's difficult to maintain that conviction in one direction, even when short-term the market is telling you that, it's headed for higher prices. But, right now we are at the key inflection point for ES. The 82.75 to 84.75 pre-market resistance is the important inflection point for continued upside. If we can break through this, we should be seeing a move at least 89.5 to 91.5. And even at that zone, we're not necessarily looking to short the market. A break above 84.75 would indicate buyers in control, and 89.5 to 91.5 and the 92F gap is a good spot to take profit, but we will be cautious shorting that area. And if we are looking to short that area, then we want to take conservative trade location, perhaps let the market fill the gap first at 92.5, and then consider taking a short if it's even warranted at that time. Because with the other markets being as strong as they are, NQ will likely be making new highs on the year as ES pushes into initial resistance, and that would just make it a tough market to short, and we could get a move up to the 95 to 97 before we see any decent rotation in ES. So we certainly want to be cautious at initial resistance. 95 to 97 is an area we can consider shorting first test, and in the event of a really strong upside move, the 1700 half to 1702 half would also be an area where we can consider shorting at first test. And this all assumes that, today is not going to develop into a trend day. If the market context in real time is telling us that the market is very directional, then we might just focus on the buy side, right, above 84.75. And really not even bother with shorting the market unless it's getting into a really extreme area. And even then, we'll be conservative with our trade management and risk management on the short side. Now, on the downside, we have pre-market support at 80 quarter, and below that we have initial support at 74 half to 76 half. Those are areas where we can look for long setups. Pre-market support 80 quarter calls for some caution because it only works in a really strong market, right? So 80 quarter long only works if the signs are there for a breakout above 84.75, right? If we get a hard rejection at 84.75, then the 80 quarter might end up being just a smaller rotation. I think it's still worth a shot on the long side with a tight stop, maybe behind 79. But it's something that, if it's going to work, it's going to work quickly. And if not, then you probably want to get out of the way because ES might be heading down to 74 half to 76 half. The 75 high volume node is really the key support, on the downside and within initial support. So we will look for a long setup at initial support. That's an area that has held multiple times, but still has potential to hold yet again. As that's happening, I'll be keeping an eye on the other markets. And in NQ, we have support at 32.20.75 to 32.23.75. That's a key support zone. In the TF, it's going to be 10.70 to 10.72 key support. So I'll be keeping an eye on that and making sure that those markets are not breaking hard below those areas, because then there might be a change in context and we might be headed lower to the 63.75 naked VPOC or the 62 half gap. So in the event of a break below initial support, it's important to note that it has to be a break and then ES has to hold below initial support. If that happens to be the case, we could quite easily test the recent lows 73 and then 69.71. Now off the 69 to 71, the important thing is going to be to note whether it's a short-term, just 2-3 point type rotation, or is the market setting up for a complete reversal off that area, similar to yesterday. Um, my initial thought is that it's going to be a small rotation and it'll be rejected around 73, 74, resulting in a continuation move down to 63.75 and the 62 half gap. But that's something we'll have to read in real time, similar to yesterday, how 73 got rejected and then the tick momentum completely shifted to the upside and gave us a signal to go long at 75, 76. So if we start holding above 75, 76 again, then it tells us that perhaps, the downside is done. But, like I said, my initial thought is that if we actually head all the way down to 69 to 71, then that's not going to end the move. It could result in a bounce back up to the 73, 74 area, maybe even 75. But I think at that point, shorting that bounce on first test is probably going to be the right trade. Again, it's something we have to watch in real time, but without having that information right now, of course, we're trading 83s. My initial feel is that it's going to continue lower if we go all the way down there. So that's really the main plan on the day. We're going to be focused on the long side for now because there's still decent strength in the other markets, and Q is trading back up near its yearly highs. So the overall sentiment in the market seems to be supporting the buy side right now, and the final objective on the upside, if we can break above 84.75, is going to be 95 to 97. So there's about 10 to 12 points to go if we break above the zone, and that's why I'd rather focus more on the long side for now until the market shows me that we're getting some clear rejection off this resistance zone, and it warrants switching our bias to the short side. So those are our main ideas on the day. Let's see how the open plays out. Let's see how we hold 80 quarter, and then take it from there.